Every day, traders and investors obsess over a single number that tries to predict the market's mood: the VIX, or CBOE Volatility Index. It's a number that can send shockwaves through Wall Street, influencing decisions from the world's biggest hedge funds to individual investors at home. Often called the fear gauge, the VIX measures how much volatility investors expect in the S&P 500 over the next 30 days. It's not just a number, it's a reflection of the market's collective anxiety or confidence, capturing the pulse of investor sentiment in real time. When the VIX is low, markets are calm and steady. Investors feel secure, and prices tend to move gradually. But when the VIX spikes higher, fear takes over, and wild price swings become the norm. It's during these moments that uncertainty rules the day. The VIX is calculated from options prices, specifically the cost of buying protection against market drops. When investors rush to buy this protection, the VIX rises sharply, signaling growing concern about the future. Readings below 20 usually mean calm waters. Above 30, anxiety is high and markets are on edge. These thresholds help investors quickly gauge the market's emotional state. Investors watch the VIX like a weather forecast, using it to prepare for financial storms or to spot opportunities when others are fearful. It's a crucial tool for risk management and strategy. Spikes in the VX often mark moments of panic. Sometimes, paradoxically, the best times to buy for those with courage and a long-term view. These moments can define careers and fortunes. In 2025, the VX's journey was a true roller coaster, reflecting a market constantly shifting between confidence and fear, with dramatic swings that kept everyone guessing. Understanding the VX's moves is key to understanding market psychology. It reveals how investors collectively react to news, uncertainty, and global events. The year's story is one of sudden shocks, quick recoveries, and the constant battle between fear and resilience, a narrative written in the VIX's every move. Let's follow the VIX through the drama of 2025, and see what it reveals about the ever-changing heartbeat of the market. 2025 began with markets basking in optimism, the VIX dropping from 26 to 14 as investors relaxed. January and February were tranquil, with the VIX hovering between 14 and 22, reflecting faith in a pro-business administration and steady economic growth. Stocks climbed and fear seemed distant, but beneath the surface, tension simmered. Trade rhetoric with China intensified, and every comment from key officials could jolt the market. Treasury Secretary Scott Bessent's reassurances calmed nerves, but the peace was fragile. The low VIX was just a snapshot. Optimism depended on everything going right. The market was a calm lake, but everyone sensed that a single stone could shatter the surface. The stage was set for a major shock. In April, the calm that had settled over the markets was suddenly shattered. Liberation Day arrived, and with it, a tidal wave of panic swept through every corner of the financial world. The sense of unease was palpable, as if everyone could feel the ground shifting beneath their feet. The VIX, often called the fear gauge, rocketed from below 17 to over 60 in just 8 sessions, a level reached only during the most severe crises. It was a visual representation of pure anxiety, flashing across screens everywhere. The S&P 500 plunged over 10% in just 2 days, echoing the worst crashes in history and wiping out months of gains in mere hours. The speed and violence of the drop left even seasoned traders stunned. Investors who had felt secure only days earlier now faced utter chaos. The sense of safety vanished, replaced by confusion and fear as portfolios shrank before their eyes. The breathtaking speed of the decline was a stark reminder that markets can fall off a cliff without warning, leaving little time to react or regroup. Yet, as the S&P 500 touched its old 2022 high, something remarkable happened. Buyers began to step in, hinting at an underlying strength that many had overlooked in the panic. For most, seeing the VIX above 60 was pure terror, a signal to run for cover. But for a few bold investors, it was a rare and powerful buying signal, a chance to seize opportunity when others fled. Extreme fear often marks the bottom of a market, if you have the nerve and conviction to act when others are paralyzed by doubt. Liberation Day was brutal, shaking out the weak hands and forcing many to capitulate, but in doing so, it cleared the way for a new phase of recovery and growth. The market's next act was about to begin, with new opportunities emerging from the ashes of panic. Sometimes, panic is just the prelude to opportunity, a reminder that in every crisis, there is a chance for those willing to look beyond the fear. Panic faded as quickly as it arrived. The VIX tumbled from its peak, signaling the worst was over. The market found support at a key technical level, and relief set in. President Trump's calming comment about the yippee bond market sparked what traders called the taco trade. Bond volatility collapsed, and confidence returned. Those who bought during the VIX spike were rewarded as stocks surged over 35% from the lows. The V-shaped recovery was swift, proving that fear often overshoots reality. The crowd is usually wrong at the extremes. Maximum fear is often the best time to buy. The taco trade was a bet on normalcy, and it paid off. Strong corporate earnings underpinned the rebound. The market's resilience was on full display. Summer brought new jitters. A weak July jobs report sent the VIX spiking again. President Trump's public frustration and calls for action from the Fed added to the uncertainty. The market hates surprises, and political pressure on economic institutions made investors nervous. The Fed faced its own turmoil, with Governor Adriana Kugler resigning and Stephen Moran stepping in. The market now juggled economic worries, Fed leadership changes, and political drama. The VIX acted as a seismograph, picking up every tremor. The path forward was anything but smooth. Each data point or headline could trigger a new wave of anxiety. The resilience shown in spring was being tested by slow-burning doubts. In 2025, markets didn't just react to numbers, they reacted to people. President Trump's every word could move stocks, and the VIX twitched with each headline. Peter Navarro's hawkish trade comments sparked fear, while Treasury Secretary Bessent's reassurances calmed nerves. The push-pull between conflict and calm kept traders on edge. Fed Chair Jerome Powell faced relentless pressure, his every statement dissected for clues. Personnel changes at the Fed, like Kugler's resignation and Moran's appointment, added to the uncertainty. Even private sector voices mattered. Jamie Dimon's cockroaches remarks sent a chill through the market. The VIX measured not just economic fear, but anxiety over unpredictable leaders. In 2025, the market was a stage for powerful personalities. Autumn brought new fears. Trade war threats with China resurfaced, and the VIX climbed. Investors worried about tariffs, supply chain disruptions, and slowing growth. Jamie Dimon's warning about cockroaches in the economy stoked fears of hidden risks, especially in regional banks. The VIX rose near 30, signaling real anxiety, but not outright panic. Traders, remembering April, bet against the fear, and bought stocks as the VIX spiked. The market stabilized, refusing to break under pressure. Autumn's anxieties didn't trigger a crash but showed how quickly sentiment can shift. The battle between recurring fears and resilience continued. The easy gains were gone. Now, every headline mattered. The market's will to move higher was tested again. As the year ended, all eyes turned to the Federal Reserve and the debate over interest rates. Stubborn inflation clashed with a weakening job market, dividing the Fed and unsettling investors. Chair Powell's cautious October comments dashed hopes for a rate cut, sending the VIX near 30 again. Uncertainty lingered until New York Fed President John Williams struck a dovish tone in November. His remarks signaled openness to easing policy, calming nerves, and sending the VIX tumbling. The Fed's communication became the market's North Star. The journey from Powell's caution to Williams's reassurance showed how central bank words can move markets. The year closed with a rate cut and renewed confidence. The VIX's final act was a return to calm. The VIX's wild ride in 2025 told a story of fear and resilience. It became a barometer for the market's collective anxiety, spiking with every headline and calming as confidence returned. Investors watched it closely, knowing it could signal both danger and opportunity. The Saturday was caracterized with shocks and recoveries, with the VIX capturing every twist. Each surge in volatility reflected a new wave of uncertainty, while every drop hinted at renewed optimism. The market's pulse was visible in every jagged move. Liberation Day's panic became the year's best buying opportunity. Those who acted against the crowd were rewarded. While many hesitated, a few saw through the fear and seized the moment, turning chaos into profit. The market's mood was shaped by data, politics, and personalities, not just numbers. Every speech, every report, and every rumor had the power to move billions, reminding us that markets are driven by human emotion as much as logic. Strong earnings fueled the recovery, but headlines drove daily swings. Even as fundamentals improved, uncertainty lingered, and investors had to navigate a landscape where news could change the mood in an instant. The VIX showed how quickly fear can take over, and how quickly it can fade. One moment, panic seemed unstoppable. The next, calm returned just as swiftly, leaving traders to wonder what would come next. Despite a 19% drawdown, the S&P 500 finished strong, and the VX ended near 15. The market's resilience was tested, but it ultimately prevailed, rewarding those who stayed the course. The lesson: fear is powerful but fleeting. Resilience endures. In the face of uncertainty, those who remained steadfast found hope and opportunity where others saw only risk. In 2025, the VIX revealed the market's nerves, but performance revealed its strength. The numbers told a story of turbulence, but also of recovery and growth. The real story was not just about fear, but about pushing through it. In the end, it was resilience, not panic, that defined the year and set the stage for what came next.